G'day folks, welcome back to another update for natural gas, Christmas Eve. So what I've got here is, it's pulling back to some trend lines we drew some time ago. Just before we go into the fundamentals, make sure you hit that like and subscribe button to support the channel. So the natural gas market, as of December 24 today, natural gas prices have experienced significant volatility, influenced by factors such as seasonal demand fluctuations, geopolitical tensions, and shifts in energy consumption patterns. For ETFs, the BOIL ProShares Ultra Bloomberg Natural Gas seeks to deliver twice the daily performance of Bloomberg Natural Gas Subindex due to the inherent volatility of natural gas prices. BOIL has exhibited substantial price swings, making it suitable primarily for short-term trading strategies. For KOLD, ProShares Ultra Short Bloomberg Natural Gas aims to achieve twice the inverse of the daily performance of the same index. Like BOIL, KOLD is designed for short-term traders looking to capitalise on declining natural gas prices. For UNG, the United States Natural Gas Fund tracks the daily price movements of natural gas. Investors should be aware of the fund's exposure to futures contracts, which can lead to contango and impact long-term performance. Now, before you get too cocky and start writing in your comments, contango, what does that mean? It was new to me as well. So contango is an occurrence in the futures market marked by contract prices rising above spot prices. So hopefully that helps explain what contango is. And next we've got the AI's impact on energy demand. The rapid expansion of artificial intelligence and data centers is significantly increasing electricity consumption. Projections indicate that data centers could account for 44% of US electricity load growth from 23 to 28, with AI potentially driving a 160% increase in data center power demand by 2030. This surge is expected to elevate natural gas demand as it remains a primary source for electricity generation. So first, starting off with the natural gas prices, we always start with the longer term trends on the monthly, the weekly and the daily. And I've got here on the monthly, you can see there the CCI is still pushing higher above its moving averages. Likewise, the price is broken above its respective moving averages as well. Now, for those new to the channel, if you want to learn how to draw these moving averages, there's multiple moving averages. The description or the video for that is in a description below. So feel free to view that after this video and learn how to draw that on your own charting software. So on the monthly, we're still bullish. On the weekly, likewise, it's still bullish above its moving averages on both the price and the CCI. And on the daily, if I just expand this one for a minute, that's actually still bullish as well above its price and CCI moving averages. But notice I've drawn these two diagonal trend lines, and it actually broke out of that. And if you'll notice, it's actually hit this minor resistance at 35.70, and it's currently retracing further to the downside. So, and also when we do trade on the intraday time frame, go to the intraday charts, we always trade in the direction of the higher time frame. So if you're trading on the 1 hour, I've got the 1 hour here, you can interchange this with your respective time frame, whether it's 2 hour, 4 hour, etc. We always trade in the direction of the higher time frame. So if the daily is showing bullish movement, we go long only. Now, you'll notice here it's a fresh breakout to the upside on natural gas. I'd like to see that the price also break above its respective moving averages to be bullish. It's a bit probably too early to say. I'd like to see both of the CCI and the price break above the moving averages to be bullish. But at the moment, you'll notice it's coming back towards this diagonal descending trend line. Now, why is that important? I've drawn a Fibonacci between that high and that low. You can see that the price is actually retraced back to that 38% level. Now, there was no divergence. That's just the CCI is moving in line with the price. There was no divergence, but we may well see it come back and bounce off this diagonal descending trend line, which happens to be also the 50% level. So I'm going to just keep an eye on that. So don't go long yet. I'd like to see this break above the moving average, as I said, on the price before going long. Next, we'll look at BOIL. Now, this is still very bearish on the price chart. There's no CCI for it. That's on the monthly. On the weekly, still likewise bearish. It's picking its head above that moving average band, but I wouldn't go long yet. It's still very much bearish. I'd like to see it break above these previous highs, especially that one there, to be more bullish. Although you notice here we've got a bullish divergence on the CCI, higher lows on the CCI versus lower lows on the price, and that's been a very long-term play since since early or the start of 2023. It's been a bullish CCI versus lower lows on the price. So again, just wait off if you're trading on the daily to see that break a lot higher, probably than that 112, 115 level. On the daily, it's actually bounced off this major support at 35.98, and that's also bullish at the moment. So at the moment, both the price and the CCI are bullish, and it looks like it's approaching possibly this 53.69 minor resistance. If it breaks above that, then the next level will be the 61.05. Now, if we go to the intraday charts, similar to the natural gas price, we only trade in the direction of the higher time frame, the daily. Now you'll notice here it's a fresh breakout to the upside. That could be an entry level. You can see there, had you gone long during that period when it broke above the CCI and it was above the price, you would have gone long there. And I prefer to close the position when the CCI breaks into that moving average range, which would have been near the top there. So that'll be probably an early start, possibly go long. And that's probably a fairly, in terms of probabilities, no guarantee of course, probably a better trade to take. Now you'll notice as well, again, I've drawn a Fibonacci extension here as well. You'll notice here the Fibonacci extension has reached just, that wick has gone up to 100% level. And if I zoom back to this period of Fibonacci retracement, you can see there that price hit the 61% level before retracing back to the downside. So these Fibonacci's, I always like to do them and to measure them, especially on the retraces. They're a bit more, there's a better probability of guessing where the price is going to go. At this point, the target price for that one would have been around the early stages of 78% and then the 100% level, and you would have just hit that had you traded that one. Next, we're looking at KOLD. Now, this has got no CCI on the, or is starting to build the CCI on the monthly. On the price chart, although we've got the price broken above, but notice it's actually hitting this, and it's retracing, hitting this moving average range on the price. So I would consider that a neutral positioning on the price chart at least. On the weekly, we did have a bearish divergence back here, higher lows on the CCI versus lower lows on the price in that same period. And then the CCI kept rising from there, and so did the price as well. A couple of retraces back here, and that's what I mean by I'd like to see it break higher than previous highs to get into the trade if you got a divergence as per the previous chart. But notice here as well, the price on the weekly is broken below the price moving averages, but also the CCI moving averages. So bearish at the moment on the weekly. On the daily, we did have a minor support at 51.80. It's actually broken down below that, and the price is still bearish. It actually started going bearish from that point. And again, if you're trading in a direction of the current trade practice, you'd be waiting till this CCI breaks into that moving average range to take your profits, which gives you an earlier exit point in terms of profitability. For example, back here, when that CCI broke below, the price was below, and you wait for that CCI to break into that moving average range. You'll notice the CCI gave you an earlier warning than waiting for the price to break into the moving average range. So you won a few points had you been going long. Had you been going short during that period. Now, if we go to the intraday charts, if you're trading on the intraday, again going short only in alignment with the daily, and similar to the other charts, I've drawn a Fibonacci extension here. You'll notice here the price is stopped at the 78% level, just below that support at 51.80. Now from here, it looks like it possibly may. It's currently neutral on the CCI, even though the price is bearish. I'd wait for this to break below that moving average range, even though it's very narrow. I'd wait for it to break below before going short. So again, had you been going short back here, you would have taken your first profit going short there and taking your first profit on that candle. That would have been a very minor break even, if not a small gain. Go short again on that candle and then wait for it to break into that CCI. You see that's near the bottom there. Take your profits, get out of the trade. Avoid going long. Again, remember, we're going short because of the daily. And if that starts going short below that moving average range on the CCI, we take a short position and hold on to it until the CCI breaks into that moving average range, similar to what it did back here. So looking at UNG, our contango partner, if you want to dance the contango, got here a bearish movement on the monthly below its moving averages of the price chart. Although notice the CCI, albeit a very narrow range, is broken above the moving average range, giving us a somewhat bullish signal. Again, I'd like to see this break above that moving average range to be more bullish. On the weekly, got a bullish divergence again, higher lows versus lower lows on the price, and that's still declining. So again, I'd like to see this break probably a lot higher, closer to about 20 on the price to be more bullish, as long as that CCI keeps rising. On the daily, it's been fluctuating in this support resistance range for some time. Had a couple of bullish moves, a couple of very minor bearish ones, and and we're currently still in a bullish trade as well. So again, if you're trading on the daily, you want to make sure you're in line with the weekly trend. And again, if you're going long there, you're still in a trade on this one. Now looking at the intraday charts, again taking long positions only. Going back to that point there, that would have been your first long entry on the 1 hour chart. You can see they're in alignment with the daily trend. It broke above. You would have gone long there. You would have just kept it there. It didn't break into the moving average range. And it finally did at that point there. So you would have got in there and got out on that one. So that would have been a very minor gain, even though we had a fairly large pullback on that bearish candle. Avoid going short because remember there's no short positioning on the daily. And go long again on that candle there. Just stuck its nose above the moving average band. And you would have got out on that little red candle there. Small gain. Wait, go long again on that candle. Ride it right up until that point on that red candle when the CCI broke into the moving average range. So that would have been a nice little trade. And again, don't go short. Wait for it to break above that moving average range. So it's a bit early yet. The price is already above. Wait for the CCI. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again and see you in the next video.